Okay, then let's resume with nothing but revising what we did the last time and then we go forward. Today's agenda is basically taking few standards on auditing first. I'll take up essay 210, then we will do essay 320, then probably essay 560, and after that we'll have to see the time remaining and according to that take decision. That we'll see later as and when the time goes. As of now, let us do a quick recap of nothing but that fraud chapter. Come on, help me. Basically, 6 questions are there, nothing fancy. When you talk about nothing but frauds and errors, you already know fraud, correct, is intentional. Error is unintentional. But there is a definition of fraud. Acha. Can you tell me fraud is defined as per which essay? 240. So as per essay 240, fraud is intentional. Acha. Done by basically the management and TCWG. Why? To deceive somebody. What is deceive? Cheat. And if you remember, for illegal or unjust advantage. Do you remember? Acha. Then we had done different types of errors and different types of frauds. Talking about different types of errors. Come on here. How many? Four: omission, commission, compensating, and principal. Correct. Thereafter, when you talk about different types of frauds, this is very important. I hope as frauds can happen either at the higher level or at the lower level. High level, who will do? Management or BOD. Low level, who will do? Employees or staff. Correct. What will the management do? Correct. They will do fraudulent financial reporting, or you can say manipulation of financial statements. Correct. What will the low level do? Misappropriation of assets. Perfect. When you talk about examples of high level, can you tell us? Correct. Window dressing, secret reserve. What is window dressing, secret reserve? We'll see shortly. And thereafter, when you talk about low level, come on, defalcation of cash or correct stock or teaming and lading. That also we will see later. When you talk about window dressing, secret reserve, come on, help me. Window dressing is what to what? What to what? Huh? Worst to best. How do you remember dash? WWC. Huh. So ultimately, I hope you realize window dressing, worst to best. Secret reserve, best to worst. So window dressing is better than actual. Secret reserve is worse than actual. Now, how do you do it? Very simple. In window dressing, you want to show better financial position. So sales and your assets overvalue, purchases, expenses, and liabilities undervalue. On the other hand, secret reserve is the opposite. Why do you do window dressing? Correct. In order to obtain loans or attract investors. Why do you do secret reserve? In order to evade tax or non-payment of bonus or dividend. But in either case, can I say secret reserve or window dressing? But in either case, they are fraud. And if it is a fraud, it is the duty of the auditor to report. Thereafter, this was basically your higher level fraud. Okay. Now talking about the low level fraud, misappropriation of assets. How can you misappropriate assets? Two things you can do. Either you can do misappropriation of goods or you can do defalcation of cash. Goods is very simple. If at all say ICS is weak for say nothing but stock, then ultimately some goods will be taken away. Talking about defalcation of cash, two things are there. One, either by inflating cash payments or by suppressing cash receipts. What is suppressing? Decreasing. Correct. Now, when you talk about inflating cash payments, can you give me two, three examples? Correct. If you people remember, first was payment against fictitious vouchers, fake vouchers. So ultimately, there was a voucher, but their expense was not incurred. Still, I took money from the company. Secondly, I took money from the company of a voucher whose amount had been inflated. For a simple example, I did Xerox charges 8,000, but I took 10,000 because I had a bill and voucher of say 10,000 rupees. So 2,000 I put in my pocket. You remember? Acha. Then casting larger totals of petty cash expense, casting nothing but totals of higher wage rolls because of dummy workers. Acha. Suppressing cash receipts. Correct. Basically, a Hopra is allowing the discount which was not there given. For a simple example, I sold for 100. So I got 100, but I told to the company that I sold only for 80 and 20 rupees I gave discount. But ultimately, that is not a discount given. So 20 I put in my own pocket. And teaming and leading. Can you tell me what is teaming and leading? It is suppressing cash receipts, but that is just what you are telling out of the two. What it means, what is actually how is it done? Can I say firstly, money is misappropriated from the debtors taken by the cashier, correct? Thereafter, money received from the subsequent debtor, subsequent customer is credited to the earlier customer's account. so that that customer's account does not show an outstanding balance for a long time. You remember? Acha, why? Because if that shows outstanding for a long time, management may call, no? And if management may call that debtor, suddenly I hope is a fraud will come into picture. And therefore, ultimately, the money received from subsequent debtor is credited to the earlier debtor's account. All cool? Okay. Thereafter, fraud risk factors. What do you mean by fraud risk factors? Those are the factors, reasons, or the purposes which make you commit a fraud. Okay. So basically, I hope they are divided into three categories: incentive or pressure, thereafter, opportunity, and lastly, attitude or rationalization. Talking about incentives or pressure, I told you if there is high degree of competition, there is declining profits for the company, or say ultimately there is a financial obligation on the employee, but he has access to cash, then ultimate similarly I hope realize the managers remuneration, it is linked to profit, so they have the incentive of increasing the profit, so more the profit, more the managerial remuneration, like that. Opportunity, I hope realize if you have large cash in hand, then ultimately you can easily manipulate. If you have nothing but weak ICS, then there is an opportunity to commit a fraud. Similarly, I hope realize if there is a situation where you are making undue advantage of nothing but I hope is your strong dominance in the market, like it is a monopolistic situation and you are charging non-arm's length price. If you remember, I'd given you an example of that ambulance, if you remember, in COVID times. I hope realize they wanted to use, but ultimately I hope realize there is nobody else, so you are like in a dominant position and you are nothing but exploiting the opportunity. So for even a short distance you are charging a bomb, so ultimately you were doing transactions at non-arm's length price. And attitude and rationalization, that was simple. I hope you realize management's attitude is only wrong. They are telling unethical values to the employees, or say from past only they have been committing violations of nothing but the laws, or ultimately say there is displeasure of nothing but the employees against the management. Management is not treating the employees well, you remember? uh, every no sleep, not doings. So ultimately since they are not treating the employees well, they may try to nothing but counter with some fraud when their time comes on earth. Acha. Thereafter, ultimately, I hope I mentioned the circumstances indicating possibility of a fraud. Now, in this also, there were nothing but four parts: discrepancies in accounting records, conflicting or missing evidence, problematic relationships between auditor and management, and lastly, others. Now I hope is talking about discrepancies in accounting records here. I hope why are they making some last minute changes? Why the transactions have not been recorded properly? Conflicting and missing evidence. There are certain missing evidence. They are not giving me information whenever I want to. There is too much delay in the information. Why are they doing like this? There is no matching between what we are asking and what we are getting as confirmation. So ultimately, I hope there is a difference in nothing but confirmation replies. Problematic relationships, eventually I hope realize they are stopping me. Now I hope realize again and again I want to do something but you're stopping me. So I want to talk to people, you're stopping me. I want to basically get information, you're stopping me. Acha, I want to nothing but talk to some IT guy, you're stopping me. I want to talk to nothing but top level management, you're feeling jealous, you're stopping me. So eventually if you keep on stopping me, how am I supposing to do work? And lastly, others. Why are you changing some estimates when ultimately your situation has not changed? If the situation change, estimate should change, but if situation has not changed and you're changing estimates, why? Yeah, so ultimately it may indicate that it may be a fraud. Then there were many, like ultimately whistleblowing was there, if you remember. Apart from that, I hope realize I there were some tips or complaints which come. Then there was tolerance of nothing but I hope realize violations. Why are you tolerating something wrong? You're tolerating something wrong because there may be a chance that you yourself may be involved, like that. Now do you understand? And lastly, we had fraud reporting. If you remember fraud reporting two, huh? Huh. I hope one was nothing but I hope telling to correct CG if it is greater than or equal to 1 CR. And second was not to CG but BOD or then auditor's report. BOD will write in their report. No, yeah, the nature of the fraud, the amount of the fraud, the parties involved, and the remedial actions taken. Correct. And last reporting was as per CARO, that if there is any fraud on or by the company which is reported, then ultimately the amount and the nature should be reported. Acha, if you remember last thing I had told you there, if at all you can recall, if there are too many frauds, then it is always better for the auditor to withdraw from the engagement. It is because if there are too many frauds, it is not possible for the auditor to detect everything. So there is a chance that he may be held responsible. And if at all he is held responsible, he is liable. then it is better rather not to continue with that audit engagement. So, if at all the auditor finds too many misstatements during the audit, he can definitely withdraw from the audit engagement. And if he withdraws, he has to inform whom? The management, TCWG, and I hope it is regulatory authority in certain cases. When I say regulatory authority, if you are an auditor of a listed company, you'll have to tell it to SEBI. All cool? Acha. I think last time we had not written this part. No, this was left out. This was still to be written. Write that, and you'd have to tell me this page number also. That also you tell later. First, you copy this much. Other point examples are to there only, no? On page numbers. That you have to see from there, no? What all? Oh, you cannot read all answers, you know. Hurry, it's left out still. That we'll see later, don't worry. This is changes, yeah. You don't know delta is change. Acha, acha. Changes in accounting estimates, yeah. क्या है क्या? Likes. Dania, come on, yeah. The page numbers are right, no, for you 170 and 171s. Only this question 6 page numbers we'll have to like do it properly. Okay, Sonu. Here I think it is page 300. Oops. I think it is on 301 also. Just check. And 308 will be Karo. Just check. All the three are okay. Yes, yes, Sonu. My mind, yeah. What to do, yeah. Nothing. I just told to copy. Not to. Come on, yeah, done, yeah. Fast, yeah. In the morning, everything works slow. Sunday holiday and after holiday coming at 6:30. Huh? Ah, next Sunday again holiday. Yeah. No, yeah. Why, Kavya? No. Yes, yes, Hari. For some batches. Or at least it began at 7 then. At least if the lecture was also there. Begin 7 every day. Yeah. Shri, shut up. Acha. I know. Acha. Now listen. Now what we have to do? Done now. Copied. Bas, that was nothing but your chapter number 5. Now let us do nothing but standard on auditing. What we are taking up first is essay 210. Before even I go there in nothing but intricacy, let us first understand the basic of it. Listen, oi. Now, mm, if you people remember, which you might not as such, but then I'm just asking. In chapter number 1, we had done objectives and scope of auditing. You remember? Acha. How many objectives of audit are there? Yeah? Two. Correct. Can I say it is primary and secondary? Not bad. Primary is to form and express an opinion on the financial statements, whether they are showing a true and fair view or not. What is secondary? To detect and prevent frauds and errors. Not bad, yeah. Acha. That is objectives. Now tell me about scope. What do you mean by scope? Scope means correct extent or coverage. Oh ho 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 ho. Acha. Now scope depends on certain factors. How many factors? Yeah. Oh, three factors. Oh, acha. Tell me. Acha. Law, ICI, and terms of engagement. Not bad. Yeah. How come you know so much audit? Yeah. Correct. Now, previously, when we people had done nothing but scope of audit, I told you scope of audit depends on three factors. One is nothing but terms of engagement. Second is nothing but requirements of law. And last is nothing but ICAI. Now, when you talk about terms of engagement, can I say these are basically nothing but terms and conditions? Can you tell me terms and conditions entered between whom and whom? Correct. Management and the auditor. Now, this terms of engagement, this terms and conditions that we people are talking about, this terms of engagement is covered specifically by SA 210. So now what we are going to do is nothing but terms of engagement, which is covered by SA 210. Now, why is it necessary to do terms of engagement? Why is it necessary to fix the terms of engagement? Basically, for one thing, to avoid misunderstandings. It is because if you people don't enter into terms of engagement, there'll be a clear misunderstanding. How? Let us just understand that example and then we go to the standard. Listen. Now, when you people talk about nothing but terms of engagement between auditor and management, okay, say there is any company X Limited, okay, say they want to appoint an auditor. Now, they have the head office also, and say they have 10 branches also. Now, if you people remember, we have learned in company audit, if there is a branch audit has to be done. By the way, can the statutory auditor himself be also the branch auditor? Yes, correct. I hope he cannot become cost auditor or internal auditor, but he can definitely become branch auditor. There it is not a problem. Acha. Now say they have found a certain Mr. R. Say this Mr. R is a CA. First question, is he qualified? Yes. So directly will they start auditing? No. So firstly, ultimately, X Limited will tell to Mr. R, no, Mr. R, audit. Now, when he says audit, he will not directly start auditing. Can I say, firstly, they will do a meeting. And in this meeting, can I say they will fix the terms and conditions? Now, supposing if I tell you that X Limited came to Mr. R and told to Mr. R, audit. Mr. R told, okay, no problems. I will do audit. Then obviously Mr. R told, but I will charge remuneration. X Limited told, how much, sir? Mr. R told, okay, 2 crores, sir. This is what I'm going to charge, sir. Then X Limited told, no problem, sir. 2 crores, done. Let us decide. Finished. Now, they decided that orally, that 2 crores will be charged. Now, the problem is, Mr. R is thinking he is going to get 2 crores from the company X Limited only to audit head office. On the other hand, X Limited is thinking they will pay 2 crores to Mr. R not only for the audit of head office financial statements, but also the audit of branches. So now you tell me there is understanding or misunderstanding? Misunderstanding. To avoid this misunderstanding, it is necessary for the auditor and the management to fix the terms and conditions and think it should be orally or in writing, and therefore it must be in writing, because if it is orally there is only misunderstanding. Now do you understand? So basic reason why to enter into terms of engagement, that also in writing, is only to avoid any confusion and only to clear nothing but misunderstandings, if any. Till here all cools? All cools. Now coming to nothing but SA 210. What is SA 210? See, SA 210 heading is agreeing to the terms of audit engagement. Audit engagement, audit only, no, yeah. And terms of audit engagement is terms and conditions. By the way, agreeing means who should agree? Auditor should agree, management should agree, or both should agree? Both should agree. I hope is when you are talking about agreeing, auditor alone will not agree to anything. Na? Like that, so he will take 2 crores for nothing. But ultimately, I hope is in that case, management will not agree. No. So eventually, I hope realize, can I say, when I say agreement, there has to be a mutual agreement. It means not only the auditor, but also the management. Correct. Now, when you people talk about SA 210, there is objectives. What is objectives? One, to check whether preconditions of audit are there or not. Repeating, to check whether preconditions of audit are there or not. Now, what do you mean by preconditions of audit? I'll tell you shortly. See, down only there is point number 1 which is written. So we will see. Don't worry about it. But by the way, when I say preconditions, what do you mean by pre? Before. Correct. So this is basically before start of audit. So before the start of audit only, there are certain conditions. Only if those conditions are met, you people will do auditing. If those conditions are not met, you people will not do auditing. So there are certain preconditions of audit. Only if those preconditions are followed, then auditing would be done. If those preconditions are not followed, auditing will not be done. Acha. Secondly, Secondly, it is to enter into a common understanding between the management and the auditor. That is basically fixing of the terms of engagement. But terms of engagement will come only after having checked all the preconditions of audit. First, you check preconditions, then you check the terms of engagement. It is not correct, the reverse order. So first you have to only check preconditions, whether they are there or not. Only if they are there, then you people go to fixing the terms of engagement. If this is only not there, so the second one will not come. So can I say second one is dependent on the first one? Okay. So basically now we have to see about two things. One is preconditions and second is common understanding. Let us talk about preconditions. See, what do you mean by preconditions? Even before I go, apply common sense so you can answer yourself with the brain that at least you have. You have, yeah. Acha. Now, ultimately, when you talk about preconditions of audit, what will be the preconditions? The auditor will basically tell to the management that there are certain conditions, Baba. These conditions have to be there. Only then I will do audit. If these conditions are not there, no, Baba, I'm not going to do audit. Now, management is asking, what conditions you have, sir? Huh? When will you do audit, sir? What are the conditions, sir? Management, I will be having all access to all information whichever is there. So I want access to all information. Management, I want access to some other information also, whichever I asked during the course of audit. Don't tell me no about it. Okay, sir. Management, I want access to certain people. Whenever I want to talk to them, I'll get information. Don't stop me from doing it. You remember, if at all they stop you from doing it, it indicates it's a fraud. So although the preconditions are there, but sometimes later on they may stop you also. They may refuse. So obviously what is pre may not be after, no? Before marriage, everything was nice only. After marriage, it may not be the same. So before marriage, you agreed. But after marriage, some other things are only going on. So in that scenario, ultimately, pre to you decided. But after, so after may not be the same as pre. So they may undergo change. Then what the auditor will do, that is his problem. But at the beginning, first, they should be there. So ultimately, I am telling to the management, you will give me access to all information. You'll give me access to any additional information. You will give me access to people whenever I want to. Not only that, management, give me in writing that it is your responsibility to make the financial statements, not mine. So ultimately, there should not be any confusion with respect to making the financial statements. And give me in writing, you have made the financial statements as per the FRF, which is applicable. Acha. Management, give me in writing that you have set up and you are maintaining nothing but the internal control system. That is not my responsibility. That is your responsibility. Come on, give me. So basically, what I'm telling is, management, FS is your responsibility. Give to me. ICS is your responsibility. Give to me. Giving information and access to all people is nothing but my right. Give to me. So eventually, I hope realize I am telling to the management only if these are there, that okay, financial statements you are making, ICS you are going to make, and you will give me access. Only then I will accept the audit, else I will not accept the audit. Can I say initially they will agree only, but later on, obviously, there may be nothing but certain things which they may not agree. So ultimately, then the auditor has to decide at that situation what type of an opinion he has to give. But this he has to check when he is undertaking a particular audit. All cool? Okay. So see, when you talk about preconditions of audit, what is it? The management have to tell to the auditor. So management will give it to the auditor. Auditor will receive from the management. So management will basically give in writing to the auditor. Okay. What? That preparation of financial statements is as per FRF. ICS is nothing but their responsibility to set up and maintain. The management will provide the auditor with three things: access to all information whenever he wants to, any additional information whatever he requires and requests for, and lastly, unrestricted access to nothing but the people inside the organization, because from the people I require nothing but information and explanation. See, last line. If preconditions are not met or if preconditions are not there, will you accept the audit? No, don't accept the audit. All cool. Okay. So these were your preconditions of audit. That is before. Now, say now preconditions of audit are met. Okay. If the preconditions are met, now what do you do? Correct. Can I say now, in order to avoid further confusion in auditing, can I say it is better that we people fix the terms and conditions? So now there has to be a common understanding between the auditor and the management. Correct. So can I say for this they will fix the terms and conditions? Acha. Orally or in writing? Writing. Correct. And that will happen normally in the format of a letter. Repeating. It will be basically in writing, and that will happen normally in the format of a letter, which is known as letter of engagement. Low. What? Letter of engagement. Low. Hey, like this, we have heard some letter before also, be. Lows. This is low. That was lows. What is lows? Letter of weaknesses and suggestions. Hello. Correct. This is LOE. Low. What is low? Letter of engagement. So ultimately, two letters you should know. One is lows and other is low. Acha. Now, when I say it will be in writing, in the format of a letter, who will give this letter to whom? The auditor will give the letter of engagement to the management. Remember, again telling, the auditor gives the letter of engagement to the management. So whatever terms and conditions they decide, the auditor will draft it in the letter. Thereafter, he will sign it, send across to the management. Management will read it. If they feel everything is correct, they will acknowledge it, and then there is a common understanding. If they don't acknowledge it and send it back to the auditor, there is no understanding, then again new terms have to be entered into. I hope you followed. Wait, who sends to whom? Auditor sends it to the management. 2 marks, correct, incorrect question. The letter of engagement is sent by the management to the auditor. Incorrect. It is sent by the auditor to the management. How will you remember? A, B, C, D. A starts, no. So A will send to M, no. M will not send to A. So who has to send the letter? It was not that bad, yeah. I to remember it like this only. Why is your brain also like that only? No, so when I'll ask you now, you'll realize that. Huh. Up till now, you how window dressing? Tell me what to what, yeah. Was to why do you remember, yeah? Why, yeah? How, yeah? You remember so much, yeah? Just because of that nonsense, no? Huh? Don't look at me. Don't look at me. It's nice, yeah. A sends to M. It starts with A B C D. So letter will go from A. Rude you are. Acha. So who will send the letter to whom? Auditor will send the letter of engagement to the management. In reality, normally management sends it to the auditor. Repeating, in reality, normally management sends it to the auditor, but that is in reality. Does it matter? No, because in theory we have to write what has to happen. In reality, something else only happens. So basically, I am telling you that in reality, when you people will do auditing, you will see suddenly that management has sent the terms and conditions letter. Then in that scenario, ultimately don't get shocked. Rahul to told ultimately auditor sends, and you told the way to remember also A B C D A starts, and ultimately now see what is happening. It is coming reverse. A B C D starting from Z now. No, that is not the way. Ultimately, in reality, it comes reverse. But yes, in theory, A will send to M. Now, when you have a letter, will that letter be blank? And you will be like, write whatever you want to write. I have signed for you. No, there's no love like that. So ultimately, in that case, there'll be certain contents of the letter. So see, terms of engagement, auditor will send a letter to the management, which is known as letter of engagement, which in short you can tell low. In this letter there will be nothing but certain contents. What contents? These are the contents, one by one. Firstly, the objective of audit. Can I say objective and scope always has to be defined? That objective is nothing but our objective is to just express an opinion. Thereafter, scope is basically the extent that we are covering the audit of so and so firm, and ultimately I hope realize so and so period, and for so and so. So for a simple example, if it is only head office, only head office. If it is a branch, then branch also. So ultimately I hope realize you have to clearly define what is your scope here. There should not be any confusion, just like it happened in my example. 2 crores for HO or branch or both. Here it should be clear. Then what should also be very clear is the responsibilities of the management and the responsibilities of the auditor. Can I say there has to be segregation? I don't know how many of you remember, this was there in auditor's report also. If you people remember, we had done basic elements in auditor's report. Go to park and be mad. In that, there were 3 responsibilities: auditor's responsibilities, management's responsibilities, and other reporting responsibilities like RO. So I hope right, those responsibilities were there also. Those responsibilities should be here also. So here it should be clearly written. It is a responsibility of the management to make the financial statements. Then auditor will write, our responsibility is just to obtain reasonable assurance. Okay. Thereafter, identify the FRF under which the audit would be done. For a simple example, if you are doing audit of a company, then can I say the audit is happening as per the Companies Act? If you are doing audit of a bank, then audit is happening as per the Banking Regulations Act. If you are auditing a cooperative society, auditing is happening as per the Cooperative Societies Act 1912. Acha. Thereafter, remuneration. This is important. I hope as whatever is a remuneration which is decided, can I say that remuneration has to be written down clearly so that there is no confusion. Not only remuneration and other matters regarding it. Now, what do you mean by other matters basically? When I say other matters, it basically means reimbursement. Now, if you people agree during the course of an audit, auditor is going to incur certain expenses. Now, when he incurs certain expenses have to be reimbursed by the client. For example, I hope there are food expenses, travel expenses, boarding and lodging expenses. Supposing if I tell you that the stock of the client is at a godown, but that godown is outstation. So ultimately, you may have to go for outstation audit. If you go for outstation audit, you're going to stay there. Then whatever boarding and lodging charges happen, the client will reimburse to you because you are going there for the purpose of audit. Normally, client only provide you. But supposing the client has not provided you, then client will tell you that you incur, we will reimburse to you. You just submit nothing but your bills and documents. So ultimately, then the bill, etc., boarding and lodging should be given, and ultimately the amount will be reimbursed. You understand what I'm telling? So ultimately, when I say remuneration and other matters basically mean reimbursement. Acha, is it necessary that everything will be reimbursed? No. I hope that also has to be decided here. No, what will be reimbursed, until what extent it will be reimbursed. So supposing whatever is to be reimbursed, say food expenses, travel expenses, boarding and lodging, finished. Apart from that, if you are going to incur any other expenses, are they going to be reimbursed? No. So that has to be also written clearly. And lastly, my expected form of report. That ultimately my form of report is expected within what period of time. That also ultimately has to be clearly written here. That such type of expected form of report has to be given in so much period of time. All cool? Come on, help me. What are the contents of letter of engagement one by one? First is objective. Next is scope. Next is responsibilities of the management. Next is responsibilities of the auditor. Okay. Next, identification of the FRF financial reporting framework. Next, remuneration and other matters. And lastly, expected form of report. All cool? All cool. Now, this comes in the examination normally for 5 marks. That what are nothing but the contents of the letter of engagement. Can I say they are very simple? Yeah. Acha. But see, if you are unable to write in examination, I'll feel very sorry. Yeah. If you are unable to write, that's a key. There's a key. What is a key? Sorry. The spelling is not the same, but then it's okay. No? It's nice. Yeah. Sorry with. Sometimes you tell sorry with heart, no? So you stress on the word, no? Sorry. Like that. You have not told sorry to anybody. Yeah. You are rude, yeah. It's nice, yeah. Sorry. Your spell, as if your English is so nice, your spellings are always right. Huh. See, S stands for scope. O stands for objective. R. There is a movie also which is coming. Remember it that ways, no? If at all you can remember it that ways, I don't care. So R. Then ultimately I for identification and E for expected. See? Sorry. Rude, yeah, you are, yeah. Hana, it's so nice. I know, right? It's nice. 5 marks. Huh. If you don't get 5 marks, you should be sorry. Exactly. See, sorry. Huh. Expected form of report is when you are expected to give that particular report. And that form of report is the report which is there as per standards on auditing. So ultimately, we are going to give such an expected form of report as per standards on auditing within so much period of time. Like that. Acha. Now, when you people talk about the terms and conditions, I told you that ultimately there'll be a letter, there'll be the contents remember, sorry, like that. Now, question to you, think and answer, huh? After accepting the terms of engagement, now the management tell you to change the terms of engagement. Will you accept? Wait. First think on earth, no? Think on earth. Why are you giving so spontaneous answers after knowing your brain, yeah? Correct. Think, no. Take time to first understand the question. I'm again asking. After entering into the terms and conditions, now the management is telling to change the terms and conditions. Will you people accept? I will give you options. Three: accept, reject, depends. Correct. Can I say you will fall in the last category only? Depends. Because that is where you normally fall. Correct. Because for you, everything is depending. Correct. Now listen. When you depends is actually correct also. Correct. See, when you people talk about whether you should accept the change or not, can I say it depends on one factor, whether it is reasonable or not. If the change is reasonable, oh, reasonable, change na, huh? Acha, if it is not reasonable, will you accept? No, then I will not accept. I hope realize, then I will go for original only, no? Then I will not go for ultimately the change. I'll give you simple example. Listen carefully now. Let us take examples. Supposing say auditor and the management, they entered into terms and conditions and they fixed an amount of 2 crores as remuneration. So this is the amount that they fixed. This is my target in life, so I've kept it. Okay, 2 crores. Now, ultimately, what happened is later on in that particular year of audit, the management faced a huge amount of loss. Since the management faced a huge amount of loss, ultimately the management, they want to now reduce their expenses as much as they can. So they are on a cost cutting spree. So ultimately one of the costs to the company, can I say, is audit fees. So ultimately management told 2 crores is very high. Where did I decide? Suddenly loss happened. I did not see. So ultimately now loss has happened. So ultimately now can I say management can request the auditor to decrease it. Acha. Supposing if I tell you, initially you decided how much? 2 crores. Now say management is telling you, sir, take 2 only lakhs. Number remaining same. Units changing. I hope price crores is becoming lakhs. Now I hope it's like first audit I am doing, second audit you are doing. Now use common sense. I hope, I'm just giving example, yeah. I use common sense, yeah. Scope of audit has not changed. Scope of audit is remaining same only. You have to do that much audit only. But now you are getting 2 crores initially. Now you are only getting 2 lakhs. Think and answer. Does it seem reasonable? No. So what will you tell to the management? Eh, eh, not reasonable. Huh? Thanks for coming. Huh? It's not reasonable. You accept or reject? Reject. And can I say once you reject, you will tell to the management, I don't want 2 lakhs. You give me my original only, which is how much? 2 crores. Say management tell you no problem. We will give you original 2 crores only. We will go somewhere else to decrease. You are not decreasing. You are very blatant. Use common sense. If they give you original now, is it okay? Okay. So you accepted or you rejected? Rejected. And after rejecting, can I say they are giving you original? Okay. Okay. Fair enough. Second situation. Hear carefully now. Initially, how much it was? 2 crores. Okay. Now the management came to you, Array auditor, loss, sir. We faced a huge amount of loss, sir. Please, sir, decrease some audit fees, no, sir. Then auditor asked, how much, Baba? How much? Tell me. Management told, sir, do one thing, no, sir. Sir, decrease by 2 lakhs, no, sir. Please accept 1.98 crores, no, sir. Think and answer. Does it seem reasonable? It seems reasonable. Wait, huh? Again, reasonableness. It depends from person to person, from case to case. So ultimately, don't think that if I am telling here it is reasonable, in all the cases it may be reasonable. Can I say that will depend? But here you are talking about me because I am auditor, 2 lakhs, no problem, reasonable. So ultimately, I am telling, okay, 1.98 crores, done. So can I say I accepted? Now, if I accepted because it was reasonable, but my original letter which was there, this letter will have 2 crores, no? So this letter is now applicable or not applicable? Not applicable. If it is not applicable, what to do? Correct. Can I say you will have to issue a new letter of engagement of the new terms? Now do you understand? Acha. Last situation. Think and answer now. Say 2 crores you decided. Okay, initially. Management told, sir, we faced a loss, sir. Please decrease, sir. Management told, okay. Then auditor told, okay, how much? Tell me. Management told, sir, take 2 lakhs only. It means, can I say I'm telling you very similar to the first situation only? Now I hope as initially 2 crores, now they are telling 2 lakhs. Think and answer. Is it reasonable? No. So will you accept? No. Will you reject? Yes. Acha. You rejected and you told management, no, Baba, I don't want 2 lakhs. I want my 2 crores only. Management rejected that. We will not give you 2 crores. You understand the difference between the first and the third one? In the first one, it was not reasonable and you asked for original, you got original. In the third case, it was unreasonable. You asked for original, management is not giving you original. It means now you are stuck with one thing only, 2 lakhs, the change. Now for you, out of this 2 lakhs, now you have to do accept or reject. Think and answer. Will you continue? Will you accept the audit for this 2 lakhs? So you think and answer here. It means, can I say if now you will not accept the audit for this 2 lakhs, so you will continue or will withdraw? So can I say the second option with the auditor is always, what he can do is he can withdraw if it is unreasonable and management are not giving you original. Now do you understand? Wait, as such, you know how many, if nothing is better, you continue, Baba, your wish. I am talking about what options are there with the auditor. I'm not telling you do this. You do for 220 also, 20 rupees. Why am I telling you? I'm example I'm giving, yeah. You do it for as much as they want to decrease. But ultimately, situations I'm telling you. You do it for free also. No, pro bono. I'll do it for you. Like that. Acha. So basically, so basically, when you people talk about nothing but situations, wait. If the change is happening, there are two options. Either the change is reasonable or it is not reasonable. If it is reasonable, I hope as you accept. If you accept, you have to draft a new law. Law means letter of engagement. On the other hand, I hope realize if at all it is not reasonable, then ultimately, obviously, you will do nothing but rejection. Now, if you do rejection, if they give you the original only, there is no problem. But if they don't give you original, then the second option, which is there, is nothing but you can withdraw. Acha, once you withdraw, can I say you'll have to inform to the management and TCWG. All cool. All cool. Acha, see. Basically, when you people talk about management told to change the toe. So if it is reasonable, change, issue the new law. If it is unreasonable, you withdraw and you communicate with TCWJ. But obviously, this is in which situation? When original is not given. Then ultimately you do this. If they give you original, then you can still continue. But if it is still unreasonable and original is not given to you, and now the change is unreasonable and they are not giving you original, then go. Then you can withdraw and you communicate with TCWG. All cool. All cool. Okay. Till here, everybody is fine. Acha. It may also happen, listen up, it may also happen with respect to preconditions of audit. You entered into preconditions. No, this was already taken. No, they told we will give you access to all info. They told you we'll give unrestricted access to people. What if I tell you later on the management is refusing the auditor to send confirmation request? It means, can I say ultimately they are stopping me? Can I say they're not giving me access to all info? Can I say they're not giving me access to people? In that case, also ultimately, I hope the terms of engagement are not there because the preconditions are not there. Since the preconditions are not there, again, what the auditor can do is he can withdraw if he feels necessary. All cools, all cools. Come to the textbooks. Let us first marks nothing but this much. Then we'll go ahead. There is one more thing which is left: recurring audit. This part. First, let us finish this much. Then I'll come to recurring audit. Later we'll copy. First you come, huh? It is in your chapter number 1 only. I had told you that we will take up later, if you remember. That later is now. Page number 12 then. Some people are going to page 460 for no reason. Hey, it's a good standard, yeah. It's nice. Simple enough. Sorry, was also nice. Huh, nice kid. That A was also nice, yeah. A, B, C, D, yeah. Hmm. How would you remember, yeah? Actually, your brain would remember it like that only by default. Yeah. Such a good brain you had, yeah? Why didn't you disclose it ever? Oh, come now. Preconditions of audit. Firstly, SA 210, whether the financial reporting framework applied in the preparation of the financial statements. Thereafter, obtain an agreement of the management that is acknowledges and understands the responsibility for the preparation of the financial statements as per FRF. Same thing as the first one here. Such internal control thereafter to provide the auditor with access to all information of which the management is aware, obviously. Additional information that auditor may request from the management, and unrestricted access to the persons within the entity from whom you can obtain audit evidence. Well, if I want to talk to anybody, don't stop me like that. Let me talk. Arey, who we are? Acha. Thereafter, if preconditions are not present, if they are not there, then the auditor shall discuss the matter with the management. That why, Baba, why are you telling no? And unless required by law or regulation to do so, auditor shall not accept the proposed audit engagement. See, it is like real life only. Yeah. Proposal may be brought to you. You see the conditions. You like it. You accept. No conditions. Thanks for coming. New proposal. No, you don't do like that. Huh? Acha. Acha. Now, thereafter, terms of engagement. When you talk about terms of engagement, it is the agreed terms which shall be recorded in the audit engagement letter or suitable form of a written agreement. It shall include objective, scope, responsibilities auditor, responsibilities management, identification of FRF, then ultimately form and content, that is expected form and content of the reports, and thereafter auditor's remuneration and other matters. Other matters is normally reimbursement. How do you remember this? Correct. We'll write it down properly, but here we are just marking in the textbook. Recurring audit will come back to it in a while. Don't worry. Thereafter comes down. Now see, limitation on scope prior to the engagement only. Now, if the management is going to limit your scope, they are going to stop you prior to the audit only. Are you going to continue? No. Then can I say auditor should withdraw basically? Acha. Now, also ultimately, I hope realize if they stop you later also, then ultimately you're not going to get information. If you're not going to get information, you will not be in a position to give any information. If you're not in a position to give any information, what kind of an opinion do you give in most cases when there is no say? Correct. Disclaimer of opinion. Good. Now see, limitation on the scope prior to the audit. If the management and TCWG impose a limitation on the scope of auditor's work in terms of the proposed audit engagement, then auditor shall evaluate the possible effect of such changes. That what is going to be the possible effect if they are stopping me, whether I'm going to get the information or not. Next, if the auditor believes the limitation will result in auditor disclaiming an opinion on the financial statements, so he is not going to get the information properly, then you should not accept, no? Then the auditor shall not accept such a limited engagement as an audit engagement unless required by law and regulation to do so. You understood what I told? Achha, now what do you mean by unless this law and regulation to do so? Sometimes the government only appoints you as an auditor. In that scenario, you cannot basically back out in that situation. You are under nothing but statute to do that audit. So ultimately, in that scenario, you will have to do. In other scenarios, you are able to leave like that. Now, do you understand? Achha. So underline if. So it is conditional. Management or TCWG impose a limitation on the scope of auditor's work. Auditor evaluate possible effects of such changes. If auditor believes that limitation will result in disclaiming opinion, the auditor shall not accept such a limited engagement. I'll not accept. Thanks for coming. Come on, everybody till here. Okay. Next one, see. Acceptance to a change in terms of engagement. I told you whether he should accept or not. Depends upon whether it is reasonable or not. So auditor shall not agree to a change in terms where there is no reasonable justification for doing so. So if it is not reasonable, don't accept. Hmm. If prior to completing the audit, auditor is requested to change the audit engagement, and that also which conveys a lower level of assurance, it means they are not going to give you information, then the auditor shall determine whether there is reasonable justification for doing so. If the terms are changed, then the auditor and the management shall agree and record the new terms, obviously in an engagement letter or other suitable form. And obviously, when I say this engagement letter, it's a new letter of engagement. I hope you are following. Once you've understood that, then this all is like very simple here to understand. Thereafter, the last thing, if the auditor is unable to agree to a change, I hope I realize that 2 lakhs was happening, I'm unable. Okay. And is not permitted by the management to continue the original audit engagement. You understand this? See, they were not giving me original 2 crores, na? So they are stopping me from getting that original. See, if they are giving original, you still continue. You rejected, but still if they give you original, you continue. But if at all you rejected and they are not giving you original, then you, what do? Then you withdraw basically. So withdraw from the audit engagement where possible and determine whether there is any obligation, contractual or otherwise, to report to the other parties such as TCWG, owners and regulators. What do you mean by obligation? Duty. What do you mean by contractual or otherwise? Contractual means it is written under a contract that if the auditor might nothing but leave the audit engagement, he has to first inform to the management TCWG. So that you people will have to inform to the management at TCWG that I am nothing but leaving because of the reason that ultimately my terms of engagement are compromised. Acha, that is under contract. Secondly, what do you mean by otherwise? Otherwise, basically you take it as a moral duty. If you are going to leave from nothing but the engagement, then it is your moral duty to inform them, no, that you are leaving from the engagement. Why? Because ultimately the terms of engagement which are there, they are changing and they are not in your favor. Come on here, I hope you followed. So when you talk about this last part, acceptance of a change, obviously that depends upon reasonableness. Reasonable, accept. Unreasonable, then basically if it is unreasonable, if they are giving you still original, then obviously you can continue. But if they are not giving you that original, then you people withdraw. All cools? All cools. Come on. What you do is come here, copy this part first. This is your entire essay 210. If you know this, you know 210. It's as simple as that. Nahin, today there is no rains. In fact, IMD department predicted that yesterday and today there is red alert in Mumbai for rains, and there is not a single drop of rain. I don't know how it happens, yeah, how they do it so consistently. In fact, first they should now start predicting when there is no rains. so that we know when there is actual rains. So when they tell there is no rain, we'll take the umbrella and go. Yeah, yeah, yeah. It is always like that. Oh, raining in Coimbatore. Yeah, all cool. The weather has become, or no? Order from Annapurna. Yeah, I'm sitting at Annapurna. Dania. Why? Yeah, no, yeah, why? Yeah. After this, what do you have? Yeah, you have something, or bus? That's it. Thanks for coming in the morning. Oh, costing. Oh, costing. Sivaji the boss. Dania, till yours. Shall I go down? हाँ क्या. Still you have not written. Yeah. Why are you like this? Yeah. Why? Yeah. I do 2 pages. Oh my god. Beauty. It's seeable, no? Such a nice standard. Yeah, it is. Many questions are possible here. I'll tell you at the end what type of questions are possible. But preconditions of audit, contents of letter of engagement, management telling to change the terms of engagement. 3 questions on this screen only themselves are possible here. In fact, that 2 marks, true or false was also there. That auditor sends a letter to the management. No, they ask reverse. Management sends it to the auditor. So that question is also possible. Mm. I will write scope audit keywise or it's fine. We'll write in the key chart keywise. SORRI. दानिया, क्या क्या इतना जल्दी कैसे हो जाता है यार, वो चाय का पानी पी के। एक्चुअली है वैसे, वो बस ऐसे ही कुछ भी is more to like open you up rather than giving you that strength, नहीं? हाँ, सालों से पी रही है। दानिया, how many still doings? Yeah, but just the last part, recurring audit is left. Once we finish that, then the standard is done. Come on, your last 30 seconds, Abhi. Absolutely no. Like bold letters, capital letters, red pen, highlight, cloud, whatever, star. नहीं रे ऋषभ, तेरे को नहीं। You are exactly. I mean, you are can be, but not so early. Come on, yeah, Dania. Vishal Dania. Okay, come on. Acha. Now, the last thing is basically regarding something known as a recurring auditor. Wait. Now, if I just tell you like that only, I just throw these two words to you. Throw. Recurring audit. What does it mean to you? Recurring audit means one time or again and again. Again and again. You know, we have come across this before also. Can anybody remember by mistake and tell me where? Not bad, yeah. Huh? Nickel, nice. Hey, Harry, not there. Huh? Vishal, perfect. We people have done this when I did audit file concept, which was in chapter number 3. If you remember audit file, paper. Now, paper assembled. If you people remember, I hope as if it's a recurring audit, there'll be too many papers. Then I told you that basically the audit file is classified into two types, permanent and current audit file. You remember, yeah? Huh. Then ultimately, I hope realize when I did permanent and current audit file, I told you about recurring audit. So recurring audit is a one-time audit or audit again and again. Audit again and again. Say X Limited is my client and I am doing the audit of X Limited since 2018. So 2018, 2019 dash year, and I'm continuing in 21 also. So ultimately for me, it is one-time audit or again and again, again and again. Now, my simple question to you, think. Can I say in every year there will be terms and conditions which are entered? Can I say definitely every year there can be some changes in terms? For a simple example, what will be remuneration here? Is it necessary remuneration will be here? No, there can be an increase. Similarly, what will be the scope here? Is it necessary it will be the same scope here? No, it can change. For a simple example, initially they gave me only head office, but now they are impressed by my work. So ultimately now they gave me branch also. So in that situation, can the scope also undergo change? Yes. So can I say definitely there can be changes in the terms of engagement which may occur. Agreed? Acha. Now supposing say in this current year, we have not decided on any new terms of engagement. In this current year, we have not entered into, in real life it will not happen. I'm just telling you theoretically, if it happens then what? There has to be some way out, right? Law should at least provide us with something, no? If that is not there, although it will not happen, but still. Acha. So if I am telling you in 21 we have not fixed the new terms of engagement, then what to do? Then how will we function? Then what will be the remuneration? Then what will be the scope? Come on, think. Then what to do? Yeah, you assume, assume. Whatever comes in the head, I'll do. No. Can I say, if at all these terms are not entered, we assume them to be the same as the previous year. So whatever was your previous audit engagement, which is based on nothing but 2020, that will be assumed to be the same as in 2021. Now do you understand? So in a recurring audit, if the terms of engagement are not changed, then it is assumed to be the same as the previous one. However, there can be certain situations which make it necessary to do what? Change the terms of engagement. Repeating, there can be certain situations which basically make it necessary to nothing but change the terms of engagement. Can I say, if there is a change in scope, change the terms of engagement? Can I say, if there is change in nothing but the nature of the business, there may be a change in terms of engagement? What if I tell you initially the nature of the business was small enough, but they have now grew over a number of years? What was the business in 2018 is not the business in 2021. The business has nothing but grew. So my auditing also has grown. My auditing has grown. My fees also should grow. So my terms of engagement should change, no? What if I tell you there is some requirements of law? Now, ultimately, I hope is initially tax audit was not applicable to this company, but now tax audit is also applicable to the company. So now I'll have to do tax audit also. So obviously the terms will undergo a change. Acha, there may be nothing but change in FRF. Initially, I hope is the accounting standards were not applicable so and so. Initially, the schedule 3 was not applicable so and so, but now I'll have to do as per them only. Now what to do? So ultimately, my compliance becomes more. My compliance becomes more, my terms will become nothing but changed. So ultimately my remuneration may increase. So ultimately there can be certain situations which demand a change in terms of engagement. There may also be certain cases where ultimately say there are misunderstandings between the auditor and the management. I hope there is misunderstandings after entering into terms of engagement. Supposing I hope is ultimately I am telling it is 2 crores, management is saying no sir, there is some fault. I think it is 0.2 crores. Excuse me. Now there is a misunderstanding with respect to point. So use common sense. There may be sometimes a misunderstanding which you may come across. If there is such a misunderstanding, in that situation it is better we clear, no? Acha. They initially told me you are auditor of branch also. We entered. Now suddenly I hope as when I'm going to the head office, they are telling me, Arey sir, that other branch auditor has come. Meet him, no? Excuse me. I only was branch auditor. Meet him. Meet who? So I have to stand in front of the mirror and meet myself? No. So ultimately, can I say there seems to be a misunderstanding? You to gave me branches also, no? Didn't you? So if you feel there is a misunderstanding, can I say it is better to again nothing but write the terms of engagement and remind the management about the terms? Acha, what if I tell you there is a change in owners only? Now, initially you entered into terms with some owners, but now those owners are only changed. They are not there. So ultimately the new owners may come. So new owners also have to check na, the terms. Ultimately, I hope realize you may tell with that old owner I had setting, he was giving me reimbursement of expenses without writing in the terms also. Now ultimately new owner will tell, old owner was giving, no, I'm new owner, no, I'll not give that. Is it written in the paper? No, no, go, incur yourself, go, don't it, go. So ultimately that may happen. Why? Because the ownership has changed. Because you entered into terms with somebody else, but now there is somebody else. You understand what I'm telling, ceiling? Okay. I'm talking to ceiling. You understood what I told? Acha. So can I say in case of a which audit? Recurring audit. There may sometimes be a situation where you'll have to remind the entity about the terms. Entity, my terms are this, you are hearing? Like that. And sometimes I hope realize you may have to change only because there is a change in the nature of the business. There is a change in the law. There is a change in the FRF. There's a change in the management. There's a change in the owners. I was the only one excited. Okay. Now see, what I mean is this. You revise the terms of engagement only if there is a misunderstanding. There are certain special terms. Later on, ultimately, branch was offered to you. Wow. So ultimately, if the terms have changed, please do it. Thereafter, change in ownership, change in senior management, change in nature of the business, change in the legal requirements, change in the FRF. In all situations, I'll have to remind the entity about nothing but the terms, and if there is any possibility, I'll have to change the terms of engagement. All cools? Come, textbook. First, we always mark, then we people write. So that at least we know that whatever we are writing is correct or not. Because you have to do audit, no. Wow. You're doing my audit only, it seems, yeah. So rude, yeah. You're practicing on me. Page number 13, as per some reliable sources. Okay, see, on recurring audit, the auditors are assess whether the circumstances require the terms of audit engagement to be revised and whether there is a need to remind the entity of the existing terms of the audit engagement. So ultimately, it is either you have to remind them about the existing or it demands a change. Okay. Now, what are those? Firstly, any indication that entity misunderstands. So there is misunderstanding. That is the first one. Indication entity misunderstands the objective and scope. Next, revised or special terms of audit engagement. What's special and all that? Thereafter, ultimately, I hope as all the changes will come. So these are all your changes. See, change of senior management, change in ownership, change in nature or size of the entity, as I was telling to you, change in legal or regulatory requirements, change in nothing but the FRF, and lastly, change in some other reporting requirements. Supposing so ultimately now CARO is applicable, so that becomes other reporting requirement. If CARO is applicable, you will have to report as per CARO also. So your scope has increased, your term should increase, remuneration should increase. No? You understand what is happening? So basically here there are as such three things. One, misunderstanding. Second, special terms. Last, changes. This is how I remember. See, that is why I have made it like this. If you check, revise the terms of engagement only if misunderstanding, special terms, and changes. Changes, then in five things: ownership, senior management, nature, legal requirement, FRF. All cool? All cool. Copy. All yours. But by the way, this is only in recurring audit. Huh? In one-time audit, what will you remind about them? See, special terms can be with respect to anything. No, it can be with respect to HO also, branch also. What if ultimately now the terms are nothing but that you are getting a branch also? Yeah, yeah, I'll show the book, Baba. First copy this. It is almost 8, yeah. I wanted to do 3 standards, yeah, at least. Let's see, yeah. I know. Today it went fast. I'll do SA 560 after this then. Then I can take up that threats to auditor independence. I can link it. I'll take 320 later then. Let's see. Depends on the time then. Take care, Somu. Two things, huh? Whether the circumstances require terms to be revised and whether there is a need to remind the entity of the existing terms. See, if they want to remove the auditor in between before the expiry of the term, you already know the removal procedure. Na? Ultimately, I hope as you will have to take the, if at all BOD is doing, they'll have to take the approval of the CG and then special resolution of the shareholders. Then in that scenario, you can do that. But then you'll have to go through that process if you still want to do that. If they are changing the terms and they don't like the auditor currently, they can do so. But ultimately, that resolution will be required. If that is not passed, then sorry, auditor will stay. Come on, you're all cool. See, here in this standard now, various questions are possible. Huh? I hope Rise first question which is possible is this only. Preconditions of audit. That is the first question which is possible. Second question which is possible is the contents of the letter of engagement, which is sorry. Thereafter, third question which is possible is in case of recurring audit only. Correct. I hope realize mention the situations where ultimately in case of recurring audit, the auditor requires a change or needs to remind the entity of the existing terms. Then you have to write this only. Basically misunderstanding, then special terms, and lastly changes. And thereafter, this limitation normally does not come, but this comes. Acceptance of a change in terms of engagement. If it is reasonable, you accept. If it's not reasonable and they are not giving you original, then you withdraw. So as such, four questions are possible only out of this particular standard. Just like SA 505, there were so many questions which are possible. Similarly, here also there are four questions which are possible. Yeah, yeah, only 5 years. No, after that, the cooling period when rotation is applicable. If rotation is applicable, recurring audit also. I say, see, that's why if you check here also, I had taken 4 years only when I was explaining. I took it for a reason. It is because I cannot exceed that limit. No, if rotation is applicable to me, then ultimately it should be within 5 years. I cannot exceed the 5 years. If rotation is not applicable to you, then more than 5 years is okay. But if it is applicable to you, then 5 years max. Come on, you're all cools. Shall we take breaks now? Then we continue after the breaks. Okay, then 810. चलेगा रे चलना अभी उतना नाटक तेरे को तो जितना दे उतना कम ही है चल 10 मिनट में आ Okay, yeah, come back. Okay, then listen. The next standard that we have is SA 560, which is on subsequent events. This is standard which is relating to your chapter number 3, which was audit documentation and audit evidence. If you remember, we had done one SA 505, external confirmation. Now I hope in that particular chapter only there were other standards also, which I told you that we people will do it in piecemeal distribution. We don't do it together, because if we do it together, I hope it becomes a bit heavy. Then it becomes not that much understandable. So it is better that we do in piecemeal distribution. One of the standards that we are taking up now is SA 560. SA 560, which is on subsequent events. Then first, obviously, you need to understand what do you mean by a subsequent event. Hear carefully. No, this is not the meaning. No. Subsequent event is an event which occurs after the date of the balance sheet, but on or before the date of auditor's report, and any facts which come to the knowledge of the auditor after the auditor's report. Again, telling her slowly. Subsequent event is an event which occurs after the balance sheet date, but on or before the date of auditor's report. So if there is any event means transaction basically, which happens after the balance sheet date, so after 31st of March, but before the auditor signs the audit report. If there is any event which happens in that time gap, that will be known as a subsequent event. Not only that, it also means any facts which come to the knowledge of the auditor after the auditor's report. So once the auditor has signed and then he comes to know about a certain fact means information, then that also I will treat it as a subsequent event. So subsequent event is not one thing. Subsequent event are two things. What is subsequent event first? It is an event which occurs after the balance sheet date, but on or before auditor's report, and any information, that is facts, which come to the knowledge of the auditor after the auditor's report. Now, actually, subsequent events is very similar to what you people have in your accounting standards. If you are aware, AS4. AS4 done. Acha, AS4 is on contingencies and events occurring after the balance sheet date. Although now contingencies are not covered by S4 anymore, contingencies are covered by S29 now. But I hope realize, but events occurring after the balance sheet date are covered, na? What do you mean by events occurring after the balance sheet date? Post balance sheet events. Same post balance sheet events are here also. Only difference is there it is accounts, here it is audit. So there it is nothing but date on which the financial statements are approved by the BOD. Here it is nothing but the date of auditor's report. So any event which occurs after the balance sheet date, but on or before auditor's report is a subsequent event. There what it was, any event which occurs after balance sheet date, but on or before the BOD sign on the financial statements, that is a subsequent event. So basically, I hope realize, can I say concept is similar, although it is not one and the same, because subsequent event include the second thing also, facts which come to the knowledge of the auditor after the auditor's report. Now do you understand? Acha. Now, before even I go to nothing but the definition again, firstly, what is the objective of this standard? Objective is very simple. It is to obtain C. But C regarding one thing only, subsequent events. Now, if you people appreciate in your AS4, can I say subsequent events, that is post balance sheet events, they are classified. They are classified into two categories, adjusting, non-adjusting. Can I say adjusting events, they require a disclosure nahi, but a adjustment of assets and liabilities. In other words, they require an adjustment in the financial statements. But when you talk non-adjusting, as the name suggests, non-adjusting, you don't have to adjust. But at least what it requires is a disclosure in the financial statements. Here also, subsequent events, same. Subsequent events are classified into two categories. One adjusting, second non-adjusting. Adjusting requires adjustment, non-adjusting requires disclosure. Now doubt. Think and answer. Huh? When can you make an adjustment and when can you make a disclosure? Only when you have identified subsequent events, no? Else, how will you make an adjustment? How will you make a disclosure? So can I say first step is to identify? So doubt. Can I say definitely somebody has to identify subsequent events? Can you tell me who will identify? Come on, think. Who will identify it? Correct. Who has to identify is the management. Good. Why the management will identify subsequent events? Reason. Who may will make adjustment in the FS? Management. Who will make disclosure in the FS? Management. My job is to check whether management have adjusted or not, whether management have disclosed or not. So my job is not to adjust. My job is not to disclose. My job is to check whether management has done that or not. So can I say identification will happen by the management? Acha, adjusting will also happen by the management. Disclosure will also happen by the management. But everything will be checked by the auditor. Correct. So you know what all the auditor will check? Firstly, whether the management have identified the subsequent events or not. Whether they have made adjustment for adjusting events or not. Whether they have made disclosure for non-adjusting events or not. Can I say if adjustment and disclosures are made properly, it means subsequent events are appropriately reflected in the financial statements. Repeating, if adjustment and disclosures are made properly, what do we tell? We tell that subsequent events have been appropriately reflected in the financial statements. Now, do you understand? Okay. Now, if you just have a look, this is basically what was the definition. Subsequent event is an event which occurs after the date of the balance sheet, but on or before the date of auditor's report, and any facts which come to the knowledge of the auditor after the auditor's report. Can I say event is basically transaction, fact is basically information. So any fact between say 31st March and say auditor signs on 30th of May, then any event between 31st March and 30th May is a subsequent event. And if the auditor comes to know about any information after 30th May, then that also is a subsequent event. By the way, what have I written on 31st of July? Check. What I have written on 31st of July is financial statements issued with the auditor's report. Now, at least you should be aware that can I say management basically has to give auditor's report to the shareholders. They have to circulate. Now, when the auditor's report goes to the shareholders, it is not only the auditor's report which goes. Along with the auditor's report, what also goes is the financial statements. If you are aware, annual report of the company. Now, when I say annual report of the company, what all does annual report have? It has nothing but chairman's communication to the shareholders, then director's communication to the shareholders, then during the year, what certain things you have achieved. So some glorious achievements during the year. Then the main part, financial statements. So audited financial statements, on that the auditor's report. So ultimately, when I say financial statements are issued, so shareholders will get the audited financial statements along with the auditor's report. Is this okay? But when will they get that? Before the signature or after the signature? After the signature. So can I say obviously that financial statements can be issued only after auditor's report? Can it come before auditor's report? No, because it has to go along with the auditor's report. Now do you understand? Okay. So the process you have to understand. See, firstly, I hope realize the management, they make the financial statements. They have to be checked by the auditor. He has to give an opinion. He will give this opinion to the management, and management will issue the financial statements with the auditor's report to the shareholders. All cool? All cool. Okay. Now I'll ask you simple questions. Think and answer. Huh? Who will identify subsequent events? Management. Okay. Who will make adjustment of subsequent events? Management. Who will make disclosure of subsequent events? Management. Who will check? Auditor, whether the subsequent events are identified or not, whether adjustment is made or not, whether disclosure is made or not. Doubt. How will the auditor check that management have identified all subsequent events? How will the auditor check? Can I say auditor himself will have to identify subsequent events? How will he identify subsequent events? Very simple. Inquiry with the management. He can ask management, batao, which are the subsequent events? Next, you can inquire with TCWG, top level management. Can I say you can read the minutes of the meetings after the balance sheet date? Means here, whatever were the meetings held here, can I say eventually I will read the minutes of these meetings and I can easily identify whatever are subsequent events. So can I say if auditor has to check whether management have identified subsequent events or not, that is possible only when the auditor himself identifies subsequent events. All cool? Acha. Now, think and answer. Huh? Think and answer. Subsequent events is only events which occur after the balance sheet date, or there is something more? Something more. Second part. It also includes facts. which come to the knowledge of the auditor after the auditor's report. Now, hear carefully, yeah? The last and the important part. Can I say auditor has to give an opinion to the management? Which is the most common opinion? We have four, no? Clean, adverse, qualified, and disclaimer. We have done in so detail here. Can I say correct? Most common, qualified. Good. Say ultimately auditor gave a qualified opinion. All cool? Acha. So auditor has given which report? Say qualified. Okay. Now hear carefully. Say after 30th May, say somewhere on 3rd June, assume. Say auditor comes to know about a certain fact. There is a whistleblower. If you remember whistleblower, I had told you before also, in nothing but circumstances indicating possibility of a fraud. Hello. So ultimately say somebody from inside the organization tells to the auditor, sir, there is a fraud, sir. Sir, window dressing, sir, check the value of this, sir. Sir, it is manipulated, sir. So ultimately there is whistleblowing. So can I say then if there is whistleblowing, auditor will now have to verify whether it is actually a fraud or not. Say auditor verifies and he comes to know it is actually a fraud. Now hear carefully what I'm telling. Say it was window dressing, assume. Now, had this information not been available after the report, but it had been available before the report, somewhere here or on the date of report, say auditor would have not given the same report. You understood what I'm trying to tell? Auditor gave a report qualified. Then I'm telling he comes to know about a certain fact. Had that fact been known to me before, then ultimately I hope realize my report would have been something else only, no? I am going for a movie. It was adults movie. I did not know. Say supposing you are going, I'm the adult. Say you dash. Now you are not an adult, assume. Now ultimately you are going, children. And ultimately you go for the movie, but suddenly it turns out to be adult movie. If I knew earlier, I would have not gone only. So if I would have not gone only, my decision would have changed, no? You though will definitely still go, being an adult. I'm adult, I'm adult. You will do something to yourself, but you will go. Don't. Shut up and pay attention. I'm explaining. So ultimately, can I say, if that fact was known before, then ultimately the report would have been same or could have been different? Could have been different. What if I tell you now it has become pervasive also? Then auditor would have not given qualified. Then he would have given adverse. Then hear carefully what I'm trying to tell. It means that the information which the auditor has got is nothing but having the capacity to change his opinion. It means the information which is there is nothing but that material information which can change the opinion of an auditor. You understood what I told? Now, problem. You have signed on qualified report. Now you know about certain information. Now what to do? Now, SA 560 allows the auditor to change the auditor's report. It means if there is some information which comes to the auditor later than the auditor's report, then SA 560 allows the auditor to amend the auditor's report. Why? It is because I hope as if the auditor feels that his report that he has given is wrong, then he should only have the right to make it correct. Then is the standard allowing him to make it correct? Yes. Then ultimately the auditor can definitely amend the auditor's report. First, is this much okay? Wait, problem. Listen, problem does not end. You can do that only if the report is with you, no? See, report has to be first given to the management, correct? Now, only if the report is with you, you can change from qualified to adverse and give it to the management, no? But what if I tell you, you have reached one stage ahead? You have already given the report to the management. Ayyo. It means you have given which report to the management? Qualified. You want to give which report? Adverse. It means management have the correct report or incorrect? Incorrect. So what will you tell to management? Give it to the shareholders. Give it. Give it. No. They will give wrong report, no? So you should tell to the management to give, or you should stop them. So can I say auditor should prevent the management from sending out the reports? And the management should send the reports when they are modified. So now the auditor will have to stop the management, wait, I will give you the change report, and thereafter you give the change report to the shareholders. You understand what I'm telling? Acha. You told to the management, stop. Just like any other person on earth, management also did not listen to you. Now In that scenario, if the management have not listened to you, it means they have issued the auditor's report without amendments. Now think and answer. Huh? In that scenario, think and answer. If you are the shareholders, you have which report in your hand? Qualified, correct. But if I am the auditor, I want you to have which report? Adverse. It means you have correct report in your hand or incorrect? Incorrect. Can I say it should be torn basically? So what will the auditor do? Auditor will call everybody and tell tear the report, tear the report. No. So can I say if I am the auditor, you are the shareholders, I want you to rely on that or not rely? Not rely. It means I have to basically tell you to stop. Can I say stop to rely on that? This stop to rely, in other words, is known as prevent reliance. So I have to prevent the reliance of your on that report. Don't rely on that report. How will I do that? Obviously, the auditor has nothing but a chance to be heard at the AGM, no? So whenever there is a meeting, I can do that. I can do that in the meeting. Or what I can also do is I can issue a public notice in nothing but the regional newspapers of where the client is situated. So supposing say the client is situated in X city, then ultimately I authorize in that X city, whatever is the regional language newspapers. In that regional language newspapers, I can give a public notice stating that the report which has been issued by us has been issued without making the necessary amendments. Please do not rely on the report. The new report, the amended report will be nothing but issued shortly. In that scenario, if you are the shareholder of that particular company, in that scenario, when you read that public notice, you will rely on that report or you will not rely. No, exactly what I have to do. Tell you not to rely. You understood what happened? Wait, let us understand. Wait. Firstly, tell me what is a subsequent event. Tell me the meaning first. What is a subsequent event? It is nothing but an event which occurs after the balance sheet date, but on or before the date of auditor's report. So that is one. And any facts which come to the knowledge of the auditor after the auditor's report. So anything which comes you after also, that is auditor's report, any fact, that also is a subsequent event. Now, what is the objective of the standard? Very simple. Objective is to obtain say regarding subsequent event. Acha, you have to identify. Who will identify subsequent events first? Management. Auditor will have to check whether management is identified or not. Then adjusting, non-adjusting. So adjustment, disclosures. Who will make adjustment and disclosures? Management. Auditor will have to check whether adjustment and disclosures are made or not. And obviously, if the adjustments and disclosures are made, we say that subsequent events are appropriately reflected in the financial statements. Achha, how will the auditor identify that the management has identified subsequent events? Auditor will identify by himself identifying. How will he himself identify? Obviously, he will first ask to the management, batao, what are subsequent events? So that they will tell you. Secondly, you read the minutes of nothing but the meetings with the TCWG, with ultimately, I hope, as the management. Try to find out subsequent events. You can also read the interim financial statements during this particular period. Once you see the financial statements, you will identify subsequent events like that. Asha. Thereafter, ultimately, the problem is, what if ultimately the auditor comes to know about a fact after the auditor's report? Had that fact been known before, there may be a situation where the change in opinion is possible. Then what to do? Then can the auditor change or amend his auditor's report? Yes. Asha. But what if ultimately the report has been given to the management? Then you stop them, prevent them. Management don't send the report to the shareholders until we make the necessary amendments. But what if they don't listen to you and still send? Then ultimately you have to stop to prevent reliance to whom? Shareholders. So you have to prevent reliance of the shareholders on that report. That basically, obviously, you can do in the meeting or basically by giving a public notice in the regional newspapers. All cool? Sure. Okay. See, I don't know whether you realize it or not. This is actually protecting the independence of an auditor. I'll tell you how. Auditor, even if he makes certain mistake, he can rectify it later. It means he does not have to worry about his mistakes that much. Even if he makes mistakes, he has a chance to rectify as per SA 560. So SA 560 basically gives a second chance to the auditor that if you have given a report, no problem. If you have made certain mistakes, which you realize it, then later on you can also nothing but change your report to nothing but cover up that mistake. All cool? All cool. Come, textbook. Chapter number 3, it will be. Page numbers to difficult task. Page number 87 then. Point number 9. SA 560. Now see, what is SA 560? Firstly, meaning subsequent events. This is very important. You will not believe meaning comes in the examination for 4 marks. Only the meaning. These 3 lines which are there, they come in the exam for 4 marks. Obviously, when you write it in the notebooks, they are of 5 lines. But yes, they come in the exam for 4 marks. Subsequent events are such events which occur. See, firstly, they are events which occur when? After the date of the financial statements and before the date of auditor's report. Correct? So that is your first part of it. And then what is the second part? Second part is, I will take orange. They are facts that come to the knowledge of the auditor after the issue of the auditor's report. So this is basically your one, and this is basically your two. Come on here, all cools? All cools. Thereafter, what is the objective regarding subsequent events? Very simple. To obtain C. About what? About subsequent events. That adjustment, disclosure in the financial statements appropriately reflected. What are the events between this and this? Subsequent events. What I have written in brackets, what I marked as bracket, that is subsequent event. Now check whether the events occurring between the date of the financial statement and the date of auditor's report. So to obtain sufficient appropriate audit evidence about subsequent events, which require adjustment and disclosures, whether they are appropriately reflected or not. And secondly, to respond appropriately to facts that become known to the auditor after the date of auditor's report. But the problem is, had they been known? Correct. To the auditor at that date. Date means which date? Auditor's report date. It may have caused the auditor to amend the auditor's report. Acha, is it necessary it will change his report? No, no, no. But it may change, no? Then if it changes, the auditor can definitely change. See, first though, he will give the chance to the management to rectify, no? If I'm finding certain misstatements, first I tell them to rectify, correct? Then only the impact on opinion is uncorrected misstatements. Ultimately, first I'll tell them to correct. If they don't correct, then it will go to opinion. Then the change will happen. Else, nahi. Acha, now see, what are the audit procedures? Firstly, for the events occurring after the date of the financial statements, but before the date of auditor's report. It means, can you tell me in my example, we are talking about which two dates? After the FS, but before the date of auditor's report. Then in my example, can I say it is after 31st March, but can I say before 30th May? So in between this, what happens? Then what to do? Now do you understand? So then what should the auditor do? Let us have a look. Then the auditor should obtain understanding management is established to ensure subsequent events are identified. In other words, check that management is doing procedures to identify subsequent events or not. Next, inquire. This is always there of the management and TCWG whether subsequent events have occurred and which will affect the financial statements. So ask to them only. Management, batao, batao. I don't know how many of you remember. In this time, this chapter only, we had done SA 580, written representation. You remember written representation could have been obtained by the auditor on any additional information if he wants. So supposing if I want to take from the management given writing, you have identified all subsequent events, you have made all adjustments, you have made all disclosures. Can I say I can take that in writing from the management? Although it does not reduce my verification. If you remember, written representation cannot substitute verification. So I will have to verify. But can I say it acts as a supporting evidence? Check. Thereafter, reading the minutes of the meetings of the owners, management, TCWG that have been held after the date of the financial statements. Why? To identify subsequent events. Else, why will I do that? Reading entities subsequent interim financial statements. Why? Same. To identify subsequent event. And see, this is the last thing which I was telling it to you. Obtain a written representation as per SFIAT that all the events occurring subsequently, in other words, subsequent events, which require one adjustment or disclosure have been adjusted or disclosed. Obviously, adjusted or disclosed by whom? By management. Correct. So take in writing from them that you have done everything. Come on, yeah, done, yeah. Hmm. Now see the next one. Next is audit procedures about what? About the facts which come to the knowledge of the auditor after the report, but before the date on which the financial statements are issued. So have they still been issued to the shareholders? No. Can I say still there is time? Then what to do? Then first check na whether ultimately they need amendment or not. They need changes or not. Tell the management to change. If they don't change, then ultimately you amend your report as accordingly. So can I say you can change your report definitely? Check. Firstly, you discuss the matter with the management and where appropriate TCWG. That is always the first point. Because there is a problem, first you have to tell to the management only. This is by management, is what I have written. This is to identify subsequent event. Thereafter, determine whether financial statement need amendment changes. So obviously management will have to change. Na? Window dressing happened, so they will have to make it proper. No, no. They will have to rectify. So inquire how the management intends to address the matter. Address, resolve in the financial statements. How they will change it. They will bring the value properly now or not. If the management amends the financial statements, then auditor shall carry out necessary procedures in circumstances. In other words, check amendment. Thereafter, unless prohibited by law, extend the audit procedures referred to such events up to the date of new auditor's report and provide a new auditor's report on the amended financial statements. Acha, see, last though you already know the statement after that. The new auditor's report shall not be dated earlier than the date of approval of the amended financial statements. Can I say first they have to be approved by the BOD? So BOD will approve the amended, that is changed financial statements. Only after that the auditor can sign. See, auditor cannot put a sign before BOD put. Because if auditor puts a sign before BOD put, then BOD will change and then BOD will change, then ultimately that becomes responsibility of the auditor also because he is also signing on them. So first who else, that only is the AS4, no? AS4 tells that first who has to sign is BOD, then who have to sign is auditor. So similarly, if you change FS, then first those FS have to be approved by BOD again, and then again the auditor will sign. All cool? All cool. And there is one more point, which is this point, which unfortunately has been here printed. If the auditor's report has not yet been provided to the entity management, then what to do? Then auditor shall himself modify, no? Modify the opinion and then provide to the entity. So if I only want to give adverse and I have given qualified, then ultimately you yourself change na from qualified to adverse, then give no. Acha. Or if the auditor's report has already been provided to the entity, you have already given qualified. Now what to do? So you have to tell them to stop. Perfect. Then the auditor shall notify, inform the management and TCWG that are involved in the managing not to issue the financial statements to the third parties before the amendments have been made. Come on here, I hope you followed. And then the last one, audit procedures of facts which become known to the auditor after the financial statements have been issued. It means now financial statements have already been gone. Then ultimately what you should do? Correct. Then, if the management does not take necessary steps to ensure that anyone in the receipt of the previously issued financial statements is informed of the situation, the auditor shall notify the management and TCWG if despite such notification, management is not telling to the shareholders, I will tell no. In respect of such notification, management does not take necessary steps, then auditor shall take appropriate action to seek to prevent reliance on auditor's report. What do you mean by prevent reliance? You will tell to the shareholders to rely or not to rely? Not to rely. So first tell management to tell them to not rely. If they don't tell, auditor will have to tell, please do not rely because they have not been amended. All cools? See, they are not that difficult situations. Once you understand where the report is now, you easily answer. If I tell you facts became known to you after, then if they had been before, then there are chances the report would have been different. Then ultimately, if the report is with you, change, no, modify. If the report is not with you, you have given to management, stop them, no, not to issue. If the report has already been given, then tell management to tell them to stop, to rely. If they don't tell, it is my duty to seek to prevent reliance, no, then I'll tell them not to rely. All cool. Bas, this is your subsequent event. See, what is basically the idea of issuing subsequent event? Idea is very simple. To give auditor nothing but level of independence. That if he comes to know about something which was not there previously, auditor can nothing but change his report. So ultimately, it is in nothing but the viewpoint of the auditor. All cools? Okay. If you wish to take, I mean, as such, this is there to take. Identify subsequent events, management adjusting or adjusting, management check by audit. Ah, this is only the essay. Only this much. Nice, no? Cute, no? Small, no? Not all the essays are very long, yeah. Some essays, like, they have too much in it, so you have to learn too much. But here it is very brief in its nature. So ultimately, whatever is those points, briefly done. Thanks for coming. Some essays are big. Like essay 610 also was small only, no, here. You either use the work or you use his direct assistance. I mean, there was nothing else in it. So basically, essays are basically just going to give you like a guidance that basically what all should be done if you are going to do that. Some essays are elaborative like 505. Today we did 210. 210 also had too much in it. Not all essays are like that, luckily. Totally, there are 34 standards, but all of them are not applicable for you. For you, what is applicable is in 20s. I forgot the number, but there are standards which are not applicable to you. I'll tell you the applicable standards are not. There is a notification of institute. Along with that only I'll tell you. So I'll keep the notification on the screen so that you know as per notification, it is not as per me. So I'm showing you my documentation. So ultimately my documents is there, and thereafter I'll tell you this is not applicable. And in the list we'll cancel what is not applicable and then what is done. Behind what is given in your textbooks now, those are bare standards on auditing, means how they were issued by institute. You cannot learn bare standards. If you try to learn bare standards, I hope it is like a dare. More than bare standards, just like bare accounting standard. Do you learn bare accounting standards how they are issued? No. I hope it is not possible only for you to learn then. Exactly. So ultimately bare standards not required, Baba. No, no, don't go through it. Are absolutely, you don't have to do bare standards. Whatever I am doing, you see that is more than enough for you to answer standards. That's it. Apart from that, illa. They have not given for time pass. They basically gave thinking that for once you may study sometime. Now that is too much optimistic. Now, but then optimism is where ultimately the hope lies, right? You don't open any of the study modules, yeah. Study modules, so they have given that pronouncements, etc. also, no. Ultimately, if you check, there are 3 modules of auditing, if I'm not wrong, because I only go through them. So ultimately, those 3 modules which are there, no, what you could do is you have to read all, no, read none. You don't have to read any study module. Give the study module to the Sev Puri wala. Tell him ultimately next time serve Sev Puri in that and give you 1 rupee discount whenever he serves you. That's it. So ultimately be of some help for yourself and him. Don't do study module, please. No, it's okay. Exactly like I did. Exactly. Don't do. Don't do. I'm talking about auditing. Don't make a generality statement. You told about all subjects like this. Yeah, yeah. Ask subject specific to people's. But auditing though definitely not required. Now see, somebody is asking, sir, what if the management intentionally hide subsequent event because of his audit report is not correct? See, that is why I'm telling to you, no, that ultimately auditor also should identify what management has identified. That is why I told you the auditor has to read minutes, financial statements. So ultimately he identifies subsequent events and then check what management have identified. There may be a chance that you have identified more than what management have identified. Then tell them to make adjustment or disclosure for this also. That is what exactly it means, no? See, नीरज आएगा, शांति. Yeah, yeah, that chapter 13 is big. It is nice. Government audit and this and that, and it's still time for that. I just have to complete this portion first and then touch that third part. Else, I would have started with chapter 9 or chapter 13. I like those. Those are fine. Those are nice. Come on, yeah, Dania. Okay, come on. I'll do one more standard, yeah, 320. What's it? I can finish it. I'll do 320. Come on, let's do one more. Listen, as far as your essay 320 is concerned, simple, yeah. It was after that only. See, you see this? Bus, this and this. That's it. There's nothing more. Thanks for coming. Okay, come on. Now let us talk about materiality. Listen, what below diagram? These diagram. Arey yaar. Anything and anything I put on the screen, you want to take down? No. Take this down. Take this. Dash. Chumma taking down what? Yeah, look at this. It's so horrible. Yeah. Done. Okay. Listen. Now, materiality. Come on. Now you answer something. What do you mean by material information? Come on, tell me. Material information. First thing to you. Important, relevant. Don't give me all that. I don't want all that. So stop giving. Apart from that, give me something. What do you mean by material information? Come on. Tells me. Significant. Okay. Vishal, perfect. Which influences decisions. Oh, we are perfect. Array, material information is any information which can influence the decisions. That is how you answer. So can I say any information which influences the decisions is known as material information. So if I'm the auditor and if at all looking at some information, I may take a decision, then that information is material information. Now do you understand? Repeating, what is material information? Any information which can influence the decisions is known as material information. So if I'm the auditor, if I'm seeing certain information and if I take a decision based on this information, then this information is material information. Now do you understand? So it is nothing but that information which has the capacity to basically change or make your decisions. Now, first question to you. You think auditor is going to check everything? No, because I hope as there is a limitation of time. So can I say able to sampling? Not only that, when he does sampling, what do you think? He should check immaterial type of transactions or material? Material. So he should basically check the amounts which are of a very small nature or big? Big. So basically, can I say auditor will not check all the transactions, he will check material transactions. Repeating, auditor will not check all the transactions, he will check material transactions. Just to give you a simple example, say supposing auditor has set up materiality level of 1 lakh. Now how to draw this, I will tell you, don't worry, I'm just giving you an example now. Say supposing he thinks above 1 lakh everything is material and below the amount of 1 lakh everything is immaterial. So he is not going to check below 1 lakh rupees. So say he has decided he will check 70% of the samples. So he will check 70% of those transactions which are above 1 lakh rupees. Now do you understand? So he is doing sampling, but he is doing sampling to check all the transactions or material transactions. Material transactions. Now listen carefully. This that he has set up is known as materiality level. How to set up? I will tell you shortly. So can I say above this, everything is material. Below this, everything is immaterial. Correct. Now, what is the objective of this standard 320? Very simple. It is to apply the concept of materiality. So auditor has to apply the concept of materiality in the audit. So for a simple example, here I have decided I will check 1 lakh or above. I'm not going to check below. Then ultimately, can I say I'm applying the concept of materiality to auditing? Now, this you can apply either for the financial statements as a whole. It means every item, asset, liability, purchase, sales, incomes, expenses, everything above 1 lakh. So this is you are setting a materiality level as a whole. Or what you can do is you can set up materiality level for some individual items also. For a simple example, say debtors. Ultimately, there are many debtors, many customers of the company. Now, obviously, auditor is not going to check all the debtors. So what does the auditor think? Are yaar, there are too many here. So ultimately, he may set up say materiality of 50,000 there. So can I say for debtors it is 50, for all other items it is 1 lakh. So can I say this is nothing but material item, but individually for a particular class of transaction. So ultimately, is it necessary to have materiality level only for the financial statements as a whole? No. Can you have materiality level for a simple or a single class of transaction? Yes. Now do you understand? Acha. So see, when you people talk about materiality, the requirement is firstly to set up materiality level for the financial statements as a whole entirely, which in my example was 1 lakh rupees. In some cases, you may have for individual class of transaction, which in my example was debtor. So for a debtor, can I have 50,000? I can. Now, how to select this materiality level? That depends upon the auditor's professional judgment. How to judge that? That there is one way to it. What is the way? To apply percentage to a benchmark. Now, repeating, how to set up that materiality level is nothing but, I hope realize, a matter of auditor's professional judgment. Now, how to do that? Standard has told you can use the benchmark technique. In other words, you apply a certain percentage to a benchmark. Doubt. What do you mean by a benchmark? Benchmark is basically nothing but something for an organization which is relevant, important. For example, can I say for a manufacturing entity, fixed asset is very relevant. So I can have fixed asset as my benchmark. For a trading concern, stock is very relevant, inventory. So inventory becomes my benchmark. So can I say my benchmark is basically for that particular organization, what is more relevant, what is more important? For say profit types of entity, net profit can be taken as benchmark. So net profit after tax, that becomes my benchmark. So benchmark depends from nothing but circumstance to circumstance, company to company, client to client. Examples are very simple. For a trade concern, you may say stock. For a manufacturing entity, you may say fixed asset. For nothing but other things, you may say sales, NPAT, etc. All cool? All cool. Okay. Say now, for example, for a trading concern, I take benchmark as sales. Acha, can I take benchmark as sales for a trading concern? Yes. That depends on auditors' professional judgment. Correct. Now, what do? Is you apply the percentage to sales. Can I say sales is benchmark? So you apply the percentage to that benchmark. Now, supposing say sales is 1 CR. Okay. And say the percentage that I'm going to apply is say 1%. So can I say it will be 100 lakhs, that is 1 CR into 1%. So can I say what I will get is 1 lakh? Then this 1 lakh is my materiality level. It means then ultimately any number more than 1 lakh is material for me. And any number less than 1 lakh is immaterial for me. Now do you understand how I set up the level? Repeating. The materiality level is set up by the auditor keeping into mind two things, his professional judgment and applying a certain percentage to the benchmark. What is benchmark? Benchmark is basically nothing but a number which is a relevant or a significant number for a significant client. So if you talk about a manufacturing industry, it can be fixed asset. If you talk about a profit making industry, it is NPAT. If you talk about basically any trading concern, it can be inventory, it can be sales, etc. So ultimately you apply a certain percentage to the benchmark and thereafter what the number you get is nothing but your materiality level. Now do you understand? Okay. Now important to understand is, think and answer. What is the materiality level set in my example? 1 lakh. So can I say he will check everything above 1 lakh? Acha, will he check below 1 lakh? No. but there is a risk, no? If you are not checking below 1 lakh, what do you think? All the frauds are only of more than 1 lakh. Can I say frauds can be of lesser than 1 lakh also? No. Can I say fraud can be of 50,000 rupees also? No. But that 50,000 will not be checked? No. Because that is below the materiality level? No. So ultimately, I hope it will go detected or undetected? Undetected. Now you may feel like this, but sir, one fraud of 50,000, what it will do, sir? You are talking about one fraud like that. What if I tell you there are hundreds of frauds like that? Then can I say individually they may not be material, but when you take collectively, can they become material? Yes. Then use common sense. Can I say when the auditor sets up a materiality level, there is a risk? There is a risk that whatever are the frauds which are below the materiality level, they may not be material individually, but they can be material collectively. And therefore, it is told that auditor on a random basis should select certain items, certain, not all, should select certain items below the materiality level also and check them, so that he comes to know whether his materiality level set is proper or not. Supposing if I tell you, when I was checking below the materiality level, that is below 1 lakh rupees, say I got many frauds of 80,000 rupees. Now try to think. If you get many frauds of 80,000 rupees, what will you think? Oh my God, there are so many frauds of 80,000. Now ultimately, auditor will think he has set up the materiality level so high. So 1 lakh seems to be a wrong materiality level. So can he bring down his materiality level to say 70,000 rupees? Yes. It means if during the course of audit, the auditor wants to revise the materiality level, can he revise the materiality level? He can. Now do you understand? When the auditor checks below the materiality level, this level is also given a name. It is known as performance materiality level. What? Performance materiality level. See, it is just a fancy name. There is nothing great about it. Performance materiality level is a level which is below the materiality level. As simple as that. So can I say sometimes auditor should check below also? Why? Because there may be frauds which are not material individually, but they can become material collectively. So when the auditor checks below the materiality level, such a level is known as performance materiality level. All cool? All cool. See, thereafter, materiality, any misstatement individually or aggregate has nothing but influence on nothing but economic decisions of the users of financial statements. This is important part. Influences decisions. Now, performance materiality level is a level which is set below the materiality level. Last thing, what is the relationship between audit risk and materiality? You will answer. You think there is a direct relationship or inverse? I have written inverse, but can it be direct also is what I want you to think. What if I tell you I have more material information? More the material information, what do you think? Ultimately, my audit risk, chance of giving a wrong opinion will be more or less? Less, correct. Can I say more the material information, lesser is the chance of me giving a wrong opinion? If I have immaterial information more, then ultimately I hope realize the chances of giving a wrong opinion is high. So relationship between materiality and audit risk is inverse. More the material information, lesser the audit risk. Lesser the material information, more the audit risk. Now do you understand? Okay, come on, tell me. Firstly, what do you mean by materiality? Can I say it is basically any information which can have an influence on nothing but the decision? Okay. Thereafter, what is the objective of this standard? Can I say it is to apply the concept of materiality? When I say to apply the concept, what do you do? Very simple. Firstly, you have to set up the materiality level for the financial statements as a whole. Is it necessary only as a whole? No. Can I set up for individual class of transactions? Yes. Example, I give you debtors already. How do you set up materiality level? Basically two things. One, you have to apply auditor's professional judgment, and then you apply a certain percentage to the benchmark fixed for everybody. No, it depends on circumstances. Ultimately you apply a percentage to the benchmark, get a number, that is your materiality. Wait, is it necessary that that only is materiality? No. Can I change during the course? Yes. If at all I feel that ultimately my materiality level is too low, too high, can I change? Yes. Not only that, sometimes the auditor should also check below the materiality level, because there may be a fraud there also. Then in that situation, ultimately, the auditor, if he checks below the materiality level, that level is known as Performance materiality level. Perfect. So performance is above the level or below? Below. Acha. And lastly, ultimately, what is the relationship between audit risk and materiality? Inverse. So ultimately, if I tell you more the material information, then lesser the audit risk. Chances of going wrong is lesser, and vice versa. All cools? All cools. Come, let's finish it. Materiality, I think it was chapter 2, if I'm not wrong. Wait. Acha, by the way, whatever is material information, auditor has to document. That his materiality level is 1 lakh, his performance materiality level below 1 lakh. Then if any changes in materiality, all that he has to do. See, come here. This point 9 in your chapter 2, page number, I don't know. Page number for you 53 then. 53? Okay then. Come. See. Materiality level, I told you we'll do later. That later is gone now. Now, when you talk about materiality, it is an important consideration for an auditor to evaluate whether financial statements show a true and fair view or not. When he is planning the audit, auditor considers what would make information materially misstated. You're always talking about material misstatements, no? This enables the auditor to select audit procedures that in combination can be expected to support audit opinion at an acceptably low degree of audit risk. In other words, more the material information, lower the audit risk. Now, what is performance materiality level? Correct. Can I say it is below? Read this. Come on, yeah, manageable. Okay. Thereafter, we have benchmark selection. Now, determining materiality involves the exercise of professional judgment. I told you, in order to decide what is the materiality level, professional judgment. Basically, a percentage is applied to a chosen benchmark as a starting point in determining materiality for the financial statements as a whole. Now, what can be the factors that you may consider to identify appropriate benchmark? There are various factors here. Elements of the financial statement, so asset, liability, equity, revenue, expenses. You can take any. Whether the items on which the attention of the users particularly tends to be focused, example, profit. The nature of the entity, if it is trading, etc., its life cycle, upward, downward, industry, economic environment, entity's ownership structure, and the way it is financed. For a simple example, if I tell you out of debt equity, company is entirely equity, then ultimately you may take only equity as the benchmark and you may apply a percentage. And the relative volatility of the benchmark. What is volatility? Change, frequent change. I'll make one statement. If your chosen benchmark is subject to frequent changes, don't select it as a benchmark. Repeating, if your chosen benchmark is subject to frequent changes, huge changes, many types changes, don't select as the benchmark, then it is not a benchmark. Benchmark is something which is stagnant to an extent. You don't want it to change that frequently. I'm not telling it will not change at all. Profits keep on changing only of the company. Acha, but I hope realize not huge changes where ultimately from 25 it has come down to 5. Select something which is nothing but stagnant in nature. That is a benchmark. Now do you understand? So if you want, you can write if frequent change, don't select as benchmark. Danya. Okay. Thereafter, we have revision in the materiality. Acha, is revision possible? Yes. Then read. Materiality for the financial statements may be whole need to be revised as a result of change in circumstances that occurred during the audit. New information. Change in auditor's understanding of the entity and its operations. So if anything has changed, my materiality level can also change. If the auditor concludes that a lower materiality for the financial statements as a whole that initially determined is inappropriate, auditor shall determine whether it is necessary to revise performance materiality also. If your materiality level will change, performance materiality level will also change, no? Acha, but what if you are changing all this? You will have to document it, no? So see, documenting materiality. Then what you have to document? First, you have to document your materiality for the financial statements as a whole. Acha. Similarly, materiality level for a particular class of transactions, just like for debtors, I told you. Thereafter, performance materiality, which is a level below the materiality, and say any revision of the above. So four things: materiality for as a whole financial statements, individual, revision, and ultimately performance materiality. Come on, you're all cool. That's it. See, finished. It's not difficult at all. See, basically, na, these really help you. If you really pay attention to what matter is here, na, trust me, you will understand the entire standard. Provided you understand what is the matter given in this chart, basically. Manageable? Oh, you want to copy here? That you always want to do. Copy. Oh, copied already here. Others copy. I want to do the threats of the auditor here, but then time was not there. Hence, I took the standard. Else, I would have taken that question. That question is nice. Threats to auditor's independence. The time was not matching, so I did not take up. I'll take up after this now once I finish this. Thanks for coming. It can happen, yeah. It's a very small question. They're quite important standards we did here. 3, 210, 560, 320. Next time we meet, we have to do that sampling and then analytical procedures. Audit sampling is there, chapter 7. And then there's analytical procedures, chapter 8. Those two are there. I don't know whether I'll be able to finish that in one lecture or not. Seems difficult, but then at least we'll try as much as we could. Yeah, and then in the last part of auditing, we do chapter 9. Is nice. Chapter 13. It's long but nice. Then there is audit of banks, which is there. Then there is some standards which are left. And then I think there is thanks for coming. Yeah, I mean, it has to come to an end at some point of time. No, it's not something which goes on and on. After this, we'll just see how much is over. We'll just go to the textbook and we'll just see what is over. Auditor's report is already done. Audit company audit is already done. 1 done, 2 done, 3 done, chapter 5 done, 4 done, risk assessment and internal control. Chapter 6 is still left. That is, I think, is automated environment. Chapter 6. I think that is your favorite IT. So that you only will do no IT. Where do I know IT? Yeah? I hardly know auditing also. You're telling me IT. It is related to IT. So ultimately, I hope as I will speak, neither will you understand nor will I. that that is what is a lecture. That is the definition of a lecture. If you have ever known the meaning of a lecture is ultimately the professor telling something without even flirting with the minds of the students and just filling up the notebooks. That is how the lecture is defined. No, but obviously your minds though. Trading concern ray, benchmark is sales, BM is benchmark. ट्रेड कंसर्न रे, इतना बुरा है क्या हैंडराइटिंग? आई नो रे. Thereafter, chapter 8 is, chapter 7 is sampling, 8 is analytical, 9 is left. So 8, 7, 8, 9, 6, from 6 it is left. 6, 7, 8, 9. Those 4 are left. Then 10 is done, 11 is done. 10 was company audit, 11 was auditor's report. 12 is what here? Then 13 is different types of entities. Bank audit. I told you audit of banks. Bank audit is there. Which are the most important chapters? Most important and all. I'll tell you towards the end. Towards the end, I'll tell you here. See, ABC analysis I'll give you, which are A category chapters, B category chapters, C category chapters. I'll give you the paper pattern also. I'll give you the timetable to prepare also. That if you want to prepare auditing, then you should prepare auditing in this much amount of time in this order. I'll give you the order also and the timetable also. If after that also you are not able to do, don't talk to me. Don't look at me. I mean, yeah, now the only thing which is after that left is nothing but I have to give you write exam for you. That is the only thing which is left. Someone like do that also. No, one step more. Yeah, this one steps you are taking. Take one step more. Yeah, God will remember. Yeah, will give you blessings. Yeah, दुआ में याद रखेंगे आपको. गला दबा दूंगा ना, पता चलेगा देखो. Huh. Don't worry. Yeah, I'll help you. Yeah, chill. Yeah, a timetable only for auditing I'll give. No, for entire interest I make timetable for you. बोलते हाँ make no, you're jobless only. No, excuse me. No, yeah, no problem. Yeah, Muthu. Yeah. Some is like if you do that, I will be happiest here. I cannot do that. No, hello. How can the other professor use my direct assistance or my work? They are using the work of internal auditor without the exactly. There has to be written in document. Illa. Someone like if you do that for us, we'll give you stationery, sir. Oh, see the fun which is there in buying the stationery uh, is not that much there, yeah, in buying as much as it is there for thieving it around. Why do you think I'm a thief? Yeah, I just took stationery. I was an employee. Yeah, I took it which was meant to be taken. I just took extra. See how much stationery I like. No, wait, I'll show you. See, whenever I go to places, now see, I keep on buying stuff. See, wait, I'll show you how many diaries and all I have. Wait, all time pass I do. See, this JKSC was giving to the students. I took it. I was like, I want more. So I thieved this first. Then ultimately you go to hotels, etc. You get stuffs. No, see, I take all this also. See, I don't leave that also. It is included in the package. Sure. This ultimately I went to one fashion show. Ultimately there they were keeping all this. So I took from them also. I was like, you don't require, I require. I took it away. See, tassel. Then ultimately this one resort we people went. So I took that also. See? Not only one. I went to the other room and I took second. Not only that, when ultimately that boy came, I told him to get one more. What's your problem, yeah? Can't take.
Chumma blaming me. Yeah. I'm making use, no? Huh? It's not that I'm not using it properly. Yeah. There, nobody was using it. Have you used ever stationery like this when you go to a resort to stay? I mean, that is the last thing you want to do at a resort, right? Yeah. The only thing that you people ready take from the resort is that shampoo, which is outdated and stuff. You bring those bottles and you're happy. Huh. Shampoo, soap, faltu. Shampoo, soap. Use that shampoo on the head. Only thing comes out is not the foam but the hair. Huh. Dania, come on, yeah. One more question after this, yeah. You have not taken anything in life ever, yeah. You have, yeah. Come on, don't lie. So rude. Don't lie, yeah. Taken, no, exactly. See, huh. Summa blaming me just because I'm a chartered accountant. Don't blame me like this. Towels, you took towels. A lunch of friends is like that's a, what do you say? It's a hug to take. Yeah, it's like, yeah, you don't take that, you feel bad. Yeah, coffee, tea, milk sachets. That is there. In the hotels and all. You bring that and they are just there in the fridge, and after a period of time, you throw it away. That is the only thing that you do. Shameless. You know what I also took from them? That kettles are there, no? That warm kettles for in which you make tea. I have three. I was like, yeah, I want to warm at home. What will I do? So I just brought it along. Yeah. Don't look at me here like this. What's the problem? Yeah. I was like, yeah, what they will use that much? I was like, I'll make tea at home with this. So I just brought it. It's so, I don't know. Some people are like, "Arey yaar, they to come for checking after you check out. Then how do you escape them?" Weak internal control system. How to do? See, you have to be very smart. What you do is you call to the room service and you tell there's no kettle in my room, so they'll get one more. After they get one more, that you put in your bag and you get lost. Ah. Like this, only people are caught, and then ultimately Indians are blamed, going everywhere. Don't look at me like that, yeah. I have not done that. That all in my house is not what I've taken from outside. Some things I also have bought. Come on, yeah, come. Do one thing. Come to standards on auditing. Behind the list of standards, I don't know where it is. I have to still find it for you. Page number, I have absolute no clue. But what I want you to find is something like this. Wait. What all they have given here. It's not going fast also. You're going at your speed. अच्छा come here. Oh, ऐसे ही यार. ते fast है तू. Auditing and assurance standards. This is where you have to come. Page number 448 as per some reliable sources. Assumed. You are never confirmed in life. Who will give a confirmation for you? Achha, come no, come. Achha. Now, see, there is, wait, I'll give you the notification first. See, this is CA notification. This is not mine notification. So don't blame me for it. Okay. Ultimately, as per this notification, there is some things which are not applicable to you. We are always interested in what is not applicable. We are not interested in first in what is applicable, because that does not happen. But one thing is sure, what is not applicable will definitely not happen. Exactly. So ultimately, list of exclusions. Thereafter, there are these standards which are not applicable to you, 9 of them. And these guidance notes are excluded. See, no guidance note for you are included. You keep it that way. We don't have to learn any guidance notes for that purpose. So for you, guidance note only is not there. Okay. These are the standards which are excluded. Now, these are the standards which are there in totality. Totality. So in totality, if you check now, see there are 35 standards because 701 was a new standard. So initially there were 34, then came 701. So it became 35. 35 minus the 9 which are not applicable to you. So that becomes 26. No, exactly. I mean, take calci if you have any problems. So ultimately 26 are applicable. Let us first mark what is Not applicable to you. Not applicable. Okay, let's do it. Come. SA 260, 265. Come on. 260, 265. Put a cross which you can see properly. Because those crosses you want to see. Thereafter 330, 402. 330, 402. Achha. Thereafter 450, 540. 450, 540. 540 was an estimate. It was a nice standard. I don't know why they removed it. Thereafter, 3. SS 600, 620, 720. 600, 620, and 720. This is not applicable. All cool? In fact, 600, 620, though I told you also, because when I was doing internal audit, that those 600s are not applicable. Although I told you a way to remember. What is left? Expert. Oh, still you remember, huh? Ah, that is how I tell you every time to remember. And thereafter, you people tell me only this is the way you have to tell to remember. Huh. And that is only how you remember. Chumma blame me everything. Now, in that ultimately, can I say SA210 we have done? SA210 is in your chapter 1. Huh? Quality control we have done, but still some facets are left out, which I had told you. So that we'll see later. Together, when it is finished, I'll tell you. Not now. Let us not mark it if it is not done entirely. 230 done. 230 was in your chapter number 3. Can I say SA 240? Hello, we did the last time only, chapter 5, fraud. Your chapter. Some are like, bloody, you are taking things away. Huh? And you are telling us, what stationary, bloody 50, 80, 100 rupees. Acha, 250 is left. Acha, 299 responsibility of joint auditors. Can I say done? Company audits. You write down company audits because we have done it there. Don't refer anything else. Refer that only. SA 300 planning. Can I say audit planning strategy? Planning is a discrete phase. Correct. Planning is not a discrete phase. It is a continual process. Not bad, yeah. I'm talking about myself. I've taught well. Chamari. 315. Can I say 315? We have seen, but we have not applied entirely. Left. I'll tell you. Materiality, just done. Chapter 2. Benchmark. Audit evidence, done. Can I say this was in chapter 3? Audit evidence and documentation. Types of audit evidence. Hello. We have done everything. 501 left. 505 done. External confirmation. Chapter 3. Initial audit engagement left. Analytical procedures left. Audit sampling chapter left. Related parties left. Subsequent events just done. Put a tick. Chapter 3. Yeah. Going concern we did, if you remember. Written representations done. 610 done. It was in chapter 4. Risk assessment and internal control. Uses work or direct assistance. Can I say then this 4? All we have done apart from this. But as of now, you put a take because anyways we have to do it together now. So I'm marking together for all of them. This we have done in chapter 11. Auditor's report. 710 is still left out of that. That we'll see later. Don't worry. SQC1 done. I'll tell you why. If you remember, audit file had come. Can you tell me that assembly of the audit file has to happen in how much time? 60 days. Correct. From the date of auditor's report. I told no. Can I say SQC1? Acha. Similarly, the documentation has to be retained for dash years. 7 years. Hey, Vishal. What 8? Can I say it is 7 years minimum? That also I told. No. Can I say SQC1? Bus. So can I say SQC1 also? Done. Apart from that, bus, that's it. Don't do these standards. These are bare standards, is what I'm telling. Don't do from there. Whatever we are doing, be there. If I have to go there ever, I'll tell you. But apart from that, no. Bus, these standards are done. Others are pending. That we will see nothing but later. All cools? All cools. Shall I do that threats to independence? I have 4.5 minutes. Like, yeah, you do. Explain yourself. And once you revise, tell us tomorrow. So rude, yeah, you are. Go. Thanks for coming. Huh. Rude peoples. Go enjoy your breakfast. Eat like there is no tomorrow. You always